Hello everyone, and welcome to this presentation of how to increase your trading odds in every market. Welcome, my name is Stephen Primo, the president and founder of Specialist Trading. And for those of you, once again, who are not familiar with our website, we are first and foremost an educational company. If you've attended any of my free weekly webinars, you'll know that I give a lot of attention in detail to teaching you how to trade. We are more about empowering you with information rather than just simply force-feeding you signals so that you can blindly take them, because it's been my experience that most traders lose. It's been estimated upwards of 80%, and it's our opinion simply because they are giving their power away. In other words, they're relying on an outside source to tell them what to do. Well, we do the opposite at Specialist Trading. I take my 37 years of trading experience from starting out on the floor, trading through the crash of 1987, then ultimately leaving to start Specialist Trading, so that I can empower my students and my members with all of the tips and techniques I've accumulated in those 37 years. Now today we have a great presentation. I'm going to share with you a couple of great techniques in order to really elevate your odds for success. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these techniques, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please take a moment to view our disclaimer. And as you are doing that, I also want to invite each and every one of you to follow us on Twitter. As you can see, this is our handle right here, abbreviated Specialist Trading. It's at SPCLSTTRADG. Every day I post free new information anywhere from signals that we are currently in, either in stocks, the E-mini, or the currency pairs. And I also post anything from daily financial wisdom to things that may be of interest. For example, the last post I had was an indication of a possible trend change in the market. So you may be interested in checking that out. So feel free and please follow us on Twitter. Okay, so as I stated off the beginning, and for those of you once again who are new to my webinars, this is an educational site. All of my webinars, I try to at least teach you something. Hopefully you can leave away from the webinar, the presentation, with something that will at least elevate your trading to a little bit higher level of consistency. And the reason I say this, and the reason why I devote so much time to teaching, is because I struggled for years when I first started to trade. Even though I started on the floor of the Pacific Stock Exchange, I really, as a specialist, went through a couple of years of really not making a dime. And my mentors taught me that the reason why I wasn't doing well, even though I had read all the books, I had gone to the seminars, and I was following conventional wisdom that had taught me what I was supposed to trade and how I was supposed to trade, none of it was working. I wasn't showing and creating any positive results. And my mentors were specialists who had been trading for a good 30 or 40 years individually on the floor. And this is what they told me. They said, Steve, look at your trading. How many indicators do you have? And I had roughly about 20 or 30 indicators on my screen. And they said, what are you listening or watching? And I was watching all the news events. I was waiting for every announcement to be coming out by either by the Fed or by the earnings reports or jobless claims or money supply. And I, even though we didn't have trading rooms or chat rooms then, I was subscribing to virtually every newsletter. So I was doing all the things that conventional wisdom tells us is going to make us successful, and I wasn't successful. And so what my mentors shared with me is they said, Steve, your trading is far too complicated. And I thought, well, isn't that the way it's supposed to be? And here's what they said to me. They said, Steve, it is the easiest thing in the world to complicate your trading. Anyone can do that. Anyone can overcomplicate your trading, whether you've been trading for 20 years or 20 minutes. But it is the most difficult thing in the world to simplify your trading. And that's where the real challenge comes in, because we've always been taught that the more complicated something is, the more valid. The more indicators we have, or the more we've read the books, or the more conventional wisdom tells us to use something, the more valid it will be. And it's been in my 37 years after listening to my mentors that it's actually the opposite. The more simplistic your trading plan is, the closer you will get to that level of consistency, which we're all searching for. So that's our goal at Specialist Trading, not just once again to force feed you signals and tell you where to buy and where to sell, but it's really to educate you and teach you how to trade with the Specialist Edge. So that's what we're going to do in all of our courses, and that's what I'm going to try to do today. So here's what you're going to learn today. Firstly, we're going to talk about conventional methods, what most people use to trade certain styles, and we're going to show you if there is any consistency in them. Then I'm going to talk about one of our most consistent strategies, which is strategy number 4. And I'm actually going to share 2 of the rules of this particular strategy. These are the core rules. I can't divulge everything. That wouldn't be fair to all the people that have spent hundreds of dollars for this strategy. But I will give you 2 of the rules so you can apply to any current trading method you may have, or you can actually construct a method off of these 2 rules. Then we're going to share with you some trade examples of strategy number 4. But then remember, the title of this presentation is how to edge or increase your odds for consistency. So I'm going to show you a technique on how to really ramp up your odds for increased success. Okay, so a lot of great free information. Now before we begin, a couple of things. This is going to be conducted like a classroom, so please, if you have any questions, kindly wait till the very end. That's the way I like to run my presentations. I promise I'll get to each and every one of them at the very end of today's class. So if you happen to see something that doesn't make sense, often if you wait for the next slide or 2, your question will be explained. But if it isn't, if you still have questions at the end of the class, just kind of remember them, and I promise I'll get to them. I'm also going to show you some older charts just for educational purposes. So they may be 6 months, a year old. I know I don't like to really focus that much on older charts, but they're mainly for clarification so that you understand how these techniques work perfectly. Then towards the end of the presentation, I'll show you newer charts that are as old as maybe a couple of hours. I took a couple of slides right before we concluded today's session, so I'll show you how these techniques work in real time as well. Okay? So, once again, hold off on any questions till we get to the very end. And let's see, we will start in just a few seconds. The last question I just want to make sure that I answer is the most common one. Is this being recorded? Yes, it is. We record all of our presentations. So if you have to leave early, or if you have to, if something isn't working in your computer, don't worry. We have links to this. You can contact us, and we'll send you a link to this recording. Okay, let's begin today's class. And let's start off by talking about one of the most conventional ways of trading, trading method number 1, and this is double bottoms and tops. There are a lot of traders that love to trade double bottoms and double tops. Another way of looking at this is support and resistance. And let's look at what conventional wisdom tells us. Here's an older chart, once again, of Apple. And a double top is usually displayed in this type of scenario. In other words, you reach some type of bottom here at point 1, you start to bounce, and then come back down to that same bottom at point 2 and appear as if you're going to hold and bounce. This, from what conventional wisdom tells us, is a very strong support level where you should be looking to purchase, because most likely price will rise after that, as it does here. Okay, and the same thing will work for double tops. As you see here, this is a daily chart of the E-mini, an older chart. We were rising in price, and we made a top right here at number 1. We sold off, went back up to number 1 area, and we created another top at number 2. So conventional wisdom once again tells us that this is a good place to sell. So you should be selling somewhere around here, because price usually drops, as we see here. Okay? Now, it's your turn to jump into the pool, and so you see here, well, you've studied all the books, you've read all the information, you've gone to the seminars, you want to start trading double bottoms and double tops because it looks so easy. And as we see here in this older chart of TGT, we have a bottom that was created at point 1. We bounce and rally. And then we have another one that's created at point 2. This looks like a perfect scenario. So you jump in and purchase TGT, and look what happens. Okay? Look familiar to anybody. How about another conventional way of trading? Trading method number 2, which is Fibonacci retracements. Okay? So many traders love to trade Fibonacci retracements. And without getting too much in detail, for those of you who aren't familiar, there are specific levels, certain retracements, certain levels of retracement where one should buy or sell depending on the direction of the trend. One of the most common and the simplest way to express this is the 50% retracement. So let me just share with you an example of how that works. Here's UPS, an older chart. For all intents and purposes, we are in an uptrend. Okay? So what you want to do is kind of block off the top of that movement and the bottom, and when price sells off to roughly half the distance right here, this is where you want to purchase, because price is retracing roughly 50% of its original up move. So when price gets to that level, that's where you jump in and buy, and look what happens. It works perfectly, right? The same thing will happen on the downside. Here's a chart of the euro yen, an older chart. Now, we are in a downtrend, excuse me, and you block off the top and the bottom of that where a price started to fall out of bed and where a price has appeared to momentarily stop. And if we bounce and rally to the 50% level, this is where you want to sell, okay? The 50% retracement in this example to the upside. So this is where you would jump in and place a limit order to sell, and works like a charm, okay? So you're all excited. You feel that, well, maybe this is what you should be trading, retracements, Fibonacci. This is so simple. It works all the time in all the books and all the seminars. So you see this example of Tiffany. Now, Tiffany is in a clear-cut downtrend. So you block off where it started to move lower to where it appears to momentarily bottomed out. And here's your 50% retracement. So when price comes back to the 50% level, you are going to place a limit order and short the stock because most likely it's going to go lower. After all, that's the way you've been trained and taught, and that's the way it works in all the seminars. So it gets to the level, you jump in and sell, and lo and behold, it goes straight up. How about that? Does that look familiar to anyone? Okay. Now I just showed you two conventional ways of trading, tops and bottoms and Fibonacci retracements. And let me just say this right off the bat. I know of traders, and there are some traders who do very well. In fact, they make very nice livings trading this way. Here's the only problem with this. You can't teach what they've learned. In other words, they have some type of an inner chart or inner way of spotting when there are good setups and when there are not. But as an educational company, we want to teach things that are cut and dry, things that everyone, when looking at the same chart, will come up with the same answer. And as you've just seen, these are too subjective. They're too, there's no consistency in them. They will work until they stop working. So that is why the majority of traders lose, is because you're listening to outside sources to tell you what to do or conventional wisdom, and there really is no consistency in them. So how do we increase our odds for trading, our trading odds in virtually every market? All right, there must be something. Well, yes, there is. It's our strategy number 4. It's not something I created. I was taught this strategy on the floor of the stock exchange when I was struggling. In fact, this was the very first strategy I learned, and I still continue to use it almost on a daily basis. All right, it's one of our most popular and consistent strategies to date. Let me just share with you some of the highlights of this. It's for virtually all traders, so it doesn't matter if you've been trading 20 years or 20 minutes. Everyone will get the same basic format from beginners to advanced. And it's for traders looking to catch quick momentum moves. The basic format is we're in and out, usually anywhere from 1 to 5 bars. And those can be 5-minute bars, they can be daily bars or weekly bars, but we're not staying in for the long haul. Now, if you want to, we teach you ways in the course to stay in much longer so you can squeeze as much profit as you'd like. But the basic format of the strategy is we're in and out rather quickly. Its intensity level from 1 to 3, if 1 was the most intense, meaning you had to always be in front of your computer, and 3 was the least intense, meaning you could virtually just enter your order and walk away, it's right in the middle at level 2. So it's a very moderate strategy to learn. It only uses one indicator. Why? Because it's a pattern recognition, all right? And we can't really go into the full rules of this particular strategy. All I can tell you is that this pattern, when you learn how to spot it, and it doesn't take a lot of practice, but it will take some practice, but when you learn how to spot it, it works in any time frame, any direction, and in any market. So that's the beauty of this particular strategy. You don't have to buy a different strategy for all the different markets. It can easily be transferred in any one. So if you trade stocks, but you also like to intraday trade the futures, and you also like to invest in the currency pairs, you can use the same rules for each and every one. But please remember, our edge here is consistency. I'm not going to sit here and tell you that every trade is a winner. I will show you some examples. In fact, one from today that was a loser. But the point being is that our strategies and what we really feel comfortable and confident about is that they're very consistent, meaning that if you do have a small loss from time to time, it will be quickly made up. In other words, these strategies are extremely resilient, especially strategy number 4. So it has kind of this 2 steps forward, 1 step back approach. So we're not going to tell you that everything works. I'm not like some websites will say, oh, follow this strategy and you'll be making a living in the next 3 weeks. We don't believe in that. And if anyone says that, in my opinion, you should run. What we're trying to instill in you is sound education so that you can become a part of the process, make your own decisions without relying on anyone or anything else, and just learn how to really listen to the market, okay? So that's what we're trying to instill in all of our members in all of our courses. Okay, so here are the two rules. You may want to write this down, but it's extremely simple. And I'm sure if you've come to any of our presentations before, you've probably seen one of them or so in the past. But if you want to buy, the two rules that are extremely important, the basis for this strategy is, first of all, price must be above the 50-period moving average. In other words, you must close above the 50-period moving average, at least on a price bar. It's more ideal if all price bars are above the 50-period, but you must at least be closing above the 50-period moving average. And then for your setup bar, the bar where everything comes together and you have a perfect setup where the pattern has been recognized and everything is in place to buy, that must close in the top 25% of its range. Now, this is where people have trouble with when they think, well, what do you mean by the top 25% of its range? Just for simplicity's sake, let's look at a daily bar. But even though this can be a 5-minute bar, a weekly bar, let's just take a daily bar. Let's say the bottom of the bar, the low of the bar, not where it opened or what the close. Forget about candlesticks or anything. It doesn't matter what type of chart we're looking at. You can call this the low of the bar. You can call this the low of the wick. It does not matter. But just the low of that day, let's say, is 50. Okay? And let's say the high of that day or the high of the wick, however you want to call it, is 54. Okay? So we divide that range from 50 to 54 into 4 separate but equal parts. Okay? So each one of those will be 1 point. If you divide 4 by 4, it comes out to 1. So from 50, the very low, from 50 to 51 is the bottom 25%. From 51 to 52 is the next 25%. From 52 to 53 is the next 25%, and the top 25% is from 53 to 54. So we want to see price closing in that top quarter. Why? Because it's telling us that most likely we're going to continue in that direction. And these are all things you see here. We're not taking any of this from what the news is telling you, the way I used to follow the news. We're not taking any of this from some retracement, Fibonacci retracement or buy-sell level or anything like that. We're not listening to any guru. We're listening to the market, the only thing we should be listening to. All right, so if we look at this generic example here, and remember, it does not matter if we're trading and we're trading with candlesticks or we're trading with standard open, high, low, close bars. All that matters is the extreme high of the range, the extreme low of the range. Now, where is price in relation to the 50-period moving average? Price is above. So this means we're looking for a buy setup. Doesn't mean we're going to buy at the market. It just means that we have to look for some type of buy setup. Now, rule number 2 is we need to find a bar that closes in the top 25% of its range. So if we look at all these bars here, we want to find bars that close in the very high of their range. Obviously, these bars close in the low, but we have bars that did close in the top 25% of their range. It's this bar and this bar, as we see here that we just filled in with green. So these are our two bars that close in the top 25% of their range. And as you can see here, there is some consistency. That trend usually continues in that direction. Once again, I cannot give you all the complete rules. There is still much more going on. We roughly have about 5 rules to this strategy, so there's a good 3 more rules that are extremely important. But I've given you just 2 of the basic format of this particular strategy, and you can use these 2 rules to apply to any strategy you currently have. So meaning that whenever you get a buy signal, just make sure that your setup bar has to close in the top 25% of its range, and just make sure that you're above the 50-period moving average. If anything at all, that one simple rule of buying above the 50 will give you that level of consistency. All right, now let's say we want to go short. Well, we just flip the rules upside down. Any sell setups must be below the 50. Now price must be below the 50, or at least the setup bar must close below the 50. And now we're looking for a bar that closes in the bottom 25% of its range. People always say, but I don't understand, what does it matter where it closes? Because once again, we are only listening to one thing, and that's the market. All right? We're not listening to outside sources, news, people on TV, what our friend is saying in a trading room or chat room. We don't care. Those things will only serve to confuse us and to doubt our trading. We only want to listen to the market, and the market, when it closes either in the top or bottom 25% of its range, is giving us a tremendous clue. In fact, it's almost screaming at us that it's most likely going to continue in that direction. So if we look at this generic example right here, we ask ourselves, where is price in relation to the 50? Obviously, price is below, so the overall trend is down. This means we're only looking to go short. And then we want to look for a bar that closes in the bottom 25% of its range. Now this bar meets all the rules perfectly, and then look what happens, okay? So you see, trading is really simple if we just learn how to listen to the markets. Let me show you some older strategy number 4 examples and show you how simple it is to trade with strategy number 4. Let's start off with stocks for all you stock traders out there. And as we see in this older chart of Apple, we ask ourselves, where is price in relation to the 50? Okay, obviously you can answer that. Price is above. So this means there is no way we would ever consider shorting Apple in this time period. Not until we had 2 or 3 consecutive closes below the 50 period. The only thing we're going to be doing is looking for buy setups. And remember, it does not mean we're going to buy at the market. It only means we look for setups to go long. And so those setups, the other rule that I shared with you, are bars that close in the top 25%. Now, even though there are a number of other bars that close in the top 25%, I've circled these ones in blue because they fit the requirement of strategy number 4. And suffice to say, they were all buy signals. So you think you could have done well with these automatic buy signals that were generated with strategy number 4. How about Coach, C-O-H? Okay, in this time period, this older chart, we ask ourselves where price was in relation to the 50. Price was below. So the only way you would have lost money trading Coach in this time period was by trying to pick a bottom. It's silly. That's a recipe for disaster. Why not just be in sync with it? And it's so simple by just asking yourself, where is price in relation to the 50? That's all you have to do. And then if we apply the other trading rule, we see here that we have 4 bars that close in the bottom 25%. That also coincided with the 3 or 4 other rules of the strategy, and these were all sell signals. Now here's an example. Sometimes people say, well, Steve, yeah, this all works great on paper, but a lot of times, a news event or something that comes out of the blue, will, really damage a strategy or a system, and nothing works then. Well, that's not really true. Obviously, if some unexpected news or happening comes out, sure, if you're on the wrong side, things can change drastically. But most of the time, it's been in my experience where I've been trading this for 30 years roughly, most of the time you are in sync with a large event that happens. As in this example with UA, as we see here that it's too difficult because of the chart. I wanted to make sure that you could see the chart here. But price is above the 50-period moving average, okay? And we have this bar here that closed in the top 25%. So this is our buy signal. So strategy number 4 generated a buy signal. All right. Now, in the next 4 days, you see the stock went anywhere up from roughly 58 all the way up to 70. Okay, a good 12 points. Now, obviously, some news came out or some event happened where it affected the stock dramatically. We didn't know this. No one called us up in advance and told us to purchase the stock because some announcement was going to be made. But because we were above the 50, the price was telling us that most likely we're going to be continuing to go higher, and because all of the rules met with the specific pattern we were looking for, we had a bar closing in the top 25%. Well, we just jumped on board, and strategy number 4 had an 11-point gain in just 4 days. Okay, so this is the beauty of this particular strategy. Now we realize a lot of people say, "Well, Steve, I don't trade stocks or currency pairs. I actually trade options." That's fine. Don't you think you could have made money just buying the calls on this? Okay, there's lots of ways to trade it. We're not an option course, but many of our students and members are option traders, and they just simply take the signal and they purchase options instead of the stock. How about the E-mini? Well, the same thing, the same rules will apply to the E-mini. We see here, this is a daily chart. Price is above the 50-period moving average. We have these 5 bars here that met all of the rules, and coincidentally, they all closed in the top 25% of their range, so they all generated buy signals using strategy number 4. So that's a daily bar. We can also go to a 5-minute time frame. This was a 5-minute time frame. We are below the 50-period moving average. Remember, all we require is that the closing price of the setup is below the 50-period. We have a total of 3 bars that close below the 50-period, and they close in the bottom 25%. So these were all sell signals. So it doesn't matter if you like to trade daily bars or intraday bars. The same rules, the same strategy will work. And then lastly, we can apply this to the Forex markets. We see here a weekly chart. We're going out now to a larger time frame, a weekly chart of the British pound. This is an older chart going back a year or so ago when the British pound was above the 50-period moving average on a weekly time frame. These three bars closed in the top 25%, and as well, in addition, they met all the rules of this particular pattern of strategy number 4. So we had 3 buy signals. Now, it doesn't look like a lot, but on a weekly time frame, these are literally thousands of dollars you could have made trading one lot of the British pound. And you can also use this to the downside. In the euro yen, we are obviously below the 50 period, so we are in no way going to consider going long the euro yen because we are below the 50. And the odds tell us we're increasing our odds for success if we are in sync with what the market is telling us. And the market is telling us if it's below the 50, most likely it's going to continue to go lower. So why buck the trend? Why try to stand in front of the market and tell the market what it's going to do? Why not just go with it? So we listen more to the market, look for these setups where bars close in the bottom of the range, and we have 3 sell signals to go short. Okay, so let's recap here before I show you how to even ramp up your odds for success. We talked about conventional methods, and remember, there are some traders who do quite well trading tops and bottoms or trading double tops and double bottoms or trading Fibonacci. But they are far and few in between because it's very difficult to teach. These particular traders have some type of inner knowing or inner type of intuitiveness where they can spot where the best setups are. But the majority of us can't. They're too subjective. One person may look at a Fibonacci retracement and say, no, that's a sell signal. Another one may say, no, that's a buy setup on a different time frame. So it's too subjective. Remember, we want things that are more cut and dry. If these things were had such a level of consistency and were so successful, then the majority of people would be trading them. And the majority of traders would not be losing money. But sadly, it's true. The majority of traders do lose money. So we share with you a technique or strategy that was taught to me some 30 years ago on the floor, strategy number 4. We shared 2 rules with you. That's basically, if you're going long, price must be above the 50-period moving average. And if you're going short, price must be below. And then we also shared the other rule, whereas if you're going long, your setup bar must close in the top 25%. And if you're going short, the setup bar must close in the bottom 25%. These are 2 extremely important messages and clues that the market is giving you. Remember, not an outside source, not some trading guru, or not some generated signals coming from some site, but the market. The market is telling you most likely what it's going to do. So all our job is to learn how to listen and just jump on board. And we showed you a lot of trading examples where we incorporated these 2 rules. Now, just what I've showed you today, there is a lot of consistency and there are a lot of odds in your favor just using these 2 things. But how can we even ramp up our odds for success even more? Okay? How can we even increase our odds? We apply the PET-D. This is our proprietary short-term trend identifier. It's not a system, it's not a strategy, but it's a trend identifier that will help you get in sync with the short-term trend. Now here's the way we use it with strategy number 4, as you can see here. These are 3 buy signals that were generated using strategy number 4. And as I shared with you earlier in the presentation, not all of them work. You know, there is a great consistency to strategy number 4, but from time to time you will see trades like this where if you would have purchased, well, you would have most likely been stopped out. Most likely you wouldn't have gotten out that quickly and you would have been stopped out. But these 2 trades did work. All right. So how can we, fine tune our entries? Pick the ones that we know have a higher level for success and the ones we don't. Well, we add the PET-D, and the PET-D is simply a color bar tool. So it colors the bars either green or red. So what we want to see is that it's confirming our signal, our strategy number 4 signal. If we get a buy signal, the setup bar should be colored green. So if we add the PET-D, we see that the colors are now added to the bars. And we see here that this worked out extremely well because it was colored green. So did this strategy, this signal I should say, strategy number 4. This one worked out well too. But if we go back to the losing trade, guess what? It was colored red, telling us that the PET-D had discerned that we were still in a short-term downtrend. So you could have bypassed that trade altogether. Here's another example in HAS. As we see here, we have 2 sell signals generated by strategy number 4. The first sell signal obviously did not work out well. All right, you would have been stopped out. But the second one worked out very well. Now the PET D, once it identifies a short-term downtrend, it changes the color of the bar red. So we want to see both of these setups colored red. That will give us the confirmation to take the trade. So if we look at the very first bar, the one that didn't work out, it was colored green because the PET D was still calculating that we were in a short-term uptrend. Therefore, you would not have taken that trade and ramped up your odds for success simply by ignoring that setup. But the second bar or second setup was colored red, giving you the confirmation to take the trade and to make a nice 3 or 4 point gain in the next few weeks or so. You can even apply this to indices to tell you when to be in the market and when to be out. Here's an older chart of the industrial average. As we see here, you can still apply strategy number 4 to indexes. And we had 3 nice buy signals, all confirmed with the PET D. They were all colored green. And they all went up roughly about 200 to 300 points in the Dow after each and every one of these signals. But as we see here, this signal did not work out. Remember, in the middle of August, we had a really severe shakeout in the market where the markets went down hundreds, if not close to 1,000 points, I believe. Now, the PET D gave us a great clue as to not to believe in this bounce in the market by not coloring the bar green. It colored it red, telling us that a short-term trend to the downside was now in place and that we should not look to go long. So we could have bypassed this signal, and it could have given us an early clue as to what direction the market was going to be headed. Now here's some other charts. These are more recent charts. I told you at the very beginning of the presentation I was going to show you some more recent charts. Here's ABX going into November. As we see here, 2 signals were generated, one a buy and one a sell. The buy didn't work out, and the PET D colored it red prior to your entry, so you wouldn't have taken this anyway. But the sell signal did work out, and the PET D confirmed it by coloring it red. So this was a valid signal to take, and you would have had all these nice gains to the downside. BBY, we had 2 signals generated coming into the first week of December, just last week. The first one was a buy signal. Would we have taken the trade? No, because the PET D colored it red. Therefore, a buy signal must be colored green in order to use the PET D, and it wasn't, so you would have bypassed this. But you would have taken the next one, and look what happened. A very nice rally to the upside. How about letter K? 2 more signals, once again generated in October and then again in the mid-November coming into December. The first was a sell signal, which we would not have taken because the PET D colored it green. Remember, the PET D needs to color sell signals red, and it needs to color buy signals green, which it did right here. And look at the nice rally it had from 63 to 66. How about Netflix? Okay, Netflix generated actually 2 signals, and this is where we show you how sometimes nothing works perfectly all the time, but that we want to also share with you the consistency in this method, whereas if one trade doesn't work out, get back on board on the next one, and most likely you'll be able to recoup your losses. As we see here, Netflix generated a sell signal in mid-October, right here at the very top, but we would not have taken the trade. Why? Because it was colored green. Remember, sell signals need to be colored red. So you were lucky enough, though, to have another signal that was generated, and this one was confirmed, and it was colored red. So look what happened. Netflix fell out of bed. Once again, the market was giving us all the information we needed to know. No one called us in advance from Netflix and told me to tell all my members to short the stock. The only thing that told me to go short Netflix was the market itself. Okay? And then later on, in the middle of November, another sell signal was generated, colored red, and gave us the option to go short once more. Excuse me. FISV, some of the best trades I've learned over my 37-year career are the ones you never take. This was a sell setup using strategy number 4. Everything looked perfect. It closed in the bottom 25% of its range. Okay, we were below the 50-period moving average, which I'm sorry we don't have posted here at this time. But the bar was colored green. Remember, all sell signals need to be colored red. So you would not have taken this trade, and it would have been a very good thing that you didn't. Look what happened to the stock. This also works on commodities. Here's crude oil. As you can see here, crude oil has been going straight down. It's been going even lower today. We all know that the only way you would have lost money trading crude oil is by trying to buy it. But strategy number 4, being in sync with the rules I shared with you, has only been generating sell signals for the last few months. Now here were 3 profitable sell signals starting out in October, all the way to just a few weeks ago to go short, and they were all confirmed red by the PET D. Here's a weekly chart of the E-mini going all the way back to 2013, as we see here in the lower left-hand corner of the screen. So we're looking back roughly a couple of years on a weekly basis for the E-mini. These were all buy signals generated to go long the E-mini on a weekly time frame. And as you can see, all of the bars were colored green. And we can go down to a smaller time frame. Here's a tick chart, a 2500 tick chart. This was last week. Now, if you're an intraday trader, you're going to get a lot of signals generated, especially if you use tick charts. If you're using minute bars, anywhere from 1 minute to 10 minutes, you'll get anywhere from 10 to 2 or 3 trades a day, depending on the time frame. But if you get tick bar charts, you're going to see a lot and a lot of trades. Now, as I stated earlier, sometimes it works and sometimes it doesn't, but it's the consistency that keeps you in the game. We had a total of 1, 2, 3, 4, 5, 6, 7, 8, 9 trades on this particular day last week. The arrows marked green were the profitable signals, and the ones marked red were the ones that were not profitable. Obviously, the PET D confirmed this by coloring the buy signals red, so you would not have taken them anyway. And then we can look at the Forex markets. Here's a chart of the daily chart of the Canadian dollar. 3 buy signals, all confirmed green. And then we can look at the short side as well. Here's the British pound. Look at all the sell signals while the British pound has continued to go lower and lower, and they were all confirmed red by the PET D. Now, the beauty of the PET D is, even though it's a short-term trend identifier, excuse me, try to say that fast, it's a short-term trend identifier, you can also apply it to longer-term charts to give you the same type of direction in trend. Let me show you what I mean here. Here is a chart of the S&P index going all the way back to 1995, all right? It's just a static chart. These are monthly charts or monthly bars, and we see here all of the peaks and valleys that the market has gone through in the last 20 years, okay? We've gone straight up, we hit and burst the bubble right here and the dot-com crash and came crashing down, and then we firmed up in 2003, 2004 and went right back up to the old highs until 2008 again, where the banking and housing crisis kicked in, and then we had another crash. And now we have continued to go higher and higher all the way up, okay? How about if you're a long-term investor? How could the PET D have told us, to stay in these nice upward moves and to get out right before a crash? Well, we just simply add the PET D, and we see here we have this consistency of green bars telling us to be in. And the rule of thumb is when you see 3 consecutive bars of a different color, that's your signal either to enter in that direction or to get out of the previous one. So we had 3 red bars right here. You could have gotten out and missed the entire crash that ensued after that. Once you had 3 green bars right here in 2003, you could have gotten back in on a longer time frame into the market, ridden the market all the way up to the old highs again until the end of 2007 when 3 more red bars appeared here, and you would have missed this crash all the way to the downside. And then in 2009, 2010, 3 more green bars appeared, and from time to time you'll see 1 or 2 reds, but remember, we need a total of 3 bars to tell us that the trend has changed. So we still have not seen 3 bars turning red on a monthly basis. So if you're a long-term investor, you are still long the market. That's the beauty of the PET D. So now we've not only given you a great strategy to trade in any time frame and in any direction and in any market, but we've also given you a great trend identifier to help you identify the trend as well as confirm your trades. So before we go to questions and answers, I just want to tell you about a great offer we have for all the attendees today. This is our 2-for-1 attendee special. We are combining strategy number 4, the consistency and the simplicity of one of our most popular and best strategies, strategy number 4, along with the PET D. Okay? You get instant course access, detailed instruction. We're going to share with you all the entries, all the exits, and all the stops to the particular strategy number 4 course. We're also going to share with you 2 continuation techniques as well as 2 pullback techniques using the PET D. You also get the add-ons, in other words, the arrows generated for buy and sell when a strategy number 4 signal is generated, as well as the add-on that changes your bars from red to green. All of this is included with weekly video trading lessons, all the access to my personal email, and all of this combined, a 2-for-1 attendee special. Now, just to show you how well this works, I took a snapshot of the close, right before the close, actually about 10 minutes before the close, of a 5-minute chart of the E-mini from today. As you can see here, we started off at 6:30 this morning, and we had 4 buy signals, or I should say 4 strategy number 4 signals today generated on a 5-minute time frame. Here were the first 2. We're above the 50-period moving average. So the first one was a buy signal right here, and you could have ridden this up from roughly 2039 all the way up to 2054. So that's a good 15 points in the E-mini. And then another buy signal was generated here. Now this one did not work. So once again, we're not afraid to share with you that sometimes it does not work, but you would have lost very small in comparison to what you would have made on the first trade. And then secondly, look at how robust it is. We have another setup here to go short later on in the afternoon once we are below the 50-period moving average. You could have made anywhere from, I'd say, about 10 to 12 points to the downside. And then another signal was generated in the last half hour of the day, another good 5 or 10 points. So counting this loss right here, you still would have had a fantastic day. These are the 4 signals that were generated on a 5-minute time frame today. They were all verified and confirmed using the PET-D. Now these are just strategy number 4. There are tons of other setups and signals that we teach you in our courses that you could have gone into the market today using the PET-D along with these courses, but we're just talking about strategy number 4 today. So you see the resiliency of this particular strategy, how even in the face of some losing trades, you'll still make it back very quickly on the other side of the market. You also see how simple it is, okay? It's extremely simple, and how it works in any market and in any time frame. As I stated, we are offering this 2-for-1 package today for all the attendees, everything included, all the rules, all the add-ons. And if we sold these separately, these courses are so popular and so powerful, if we sold them separately, it would roughly be close to $3,200, okay, over $3,000 easily. But we're dropping the price down, I believe, roughly about $1,200 down to $1,995, and we are including payment plans. So if you can't come up with that sum right off the bat, talk to one of our trading consultants, and we can put together a trading plan where you give us a nice deposit, and we can have you up and running in the next few moments, okay? But this is for a limited time only. So if you're really interested about getting your trading back on track for 2015, I just showed you all the examples, all the ways it can be used. Here's a way to contact and reach us. You can contact our sister site, which is Pro Trader Strategies. They market and promote all of my individual courses and studies, and you can email them at trading@ProTraderStrategies, talk to any one of the trading consultants, or call them directly at area code 310-598-6677, and they can set you up really quickly with that great deal, that great 2-for-1 attendee special, so that you can have you up and running as early as today. And so you can be learning the rules and learning everything extremely simple and extremely easy, okay? Remember, this is for a limited time only, this 2-for-1 attendee special. Last week we had, I believe we had the attendee special, but the week prior we had something entirely different. So once again, if you're really interested about getting out of the rut that you may have been in 2014 and turning your trading around, you've just seen examples in the stock market, you've seen examples in the futures, as well as examples in the currency pairs. You've seen examples on weekly charts, daily charts, and even intraday charts. And then lastly, I showed you an example from just a few hours ago if you were intraday trading. We realize that 1995 may be a lot for people to come up with one lump payment, so don't be afraid. You can contact us by reaching us at these numbers or this email address, and we'll put together some type of payment plan for you, okay? So I'm going to leave this information up here while I open up the question and answer box. And I want to thank you all for waiting if you happen to have had a question. And let me open this up really quickly. Gary asks, does strategy number 4 work just as well on weekly bars as it does on daily bars? Yes, Gary, that's a good question. And in fact, let me tell you something about weekly bars. First of all, there are obviously going to be changes because of the time frame. The higher time frame you go, in other words, if you go out from a 5-minute bar to an hourly bar, you go out from an hourly bar to a daily bar, you will get less and less signals. That's just the way, things work by having less and less bars. But your gains will be larger as well. on the negative side, your risk will be larger as well, but you'll still see valid signals. So here's what a lot of our traders like to do. They are option traders. They don't trade the stock, and so they want to look for those nice, 5-bar moves, whereas if you're looking at a daily bar, you're in and out in 5 days. They would rather look for a nice move, as some of the examples I showed you. So they simply just look for signals on weekly bars and then purchase long calls or long puts. Therefore, they're still getting the value of all the rules, and then they're getting the extra advantage of possibly making a lot more because of a lot more room to move in their direction. So that's one way. We have a lot of option traders, and remember, we're not really an option course, but a lot of our traders do trade options, and that's the way they apply them. So they're very happy with that. So to answer your question, yes, there is a very high level of consistency on weekly bars, and even on monthly bars as well. Okay. Let me see here. When do we place a sell order in the second arrow? Well, Mahmoud, that's part of the course. That's our entry technique, and we also have different entry techniques. We have conservative, we have the standard entry technique, and then we have a very aggressive entry. So these are all things we teach in the course. We can't give away all the rules. Same thing with the stops too. We have upwards of 4 different stop placement levels. And we just can't share all of that with you because it wouldn't be fair for the people who have spent some $3,000 on this to give away all the rules for free, okay? Joy asks, what platform does the PET-D work on? Okay, well, the PET-D works on NinjaTrader. It also works on TradeStation. It works on Metastock and MT4. Excuse me. Now, you can apply it to Thinkorswim, but there are a few different changes that need to be made. Thinkorswim will, I believe it uses Ameritrade. So you can use the Ameritrade data, but then you have to get a free Ninja platform, okay? And Thinkorswim will allow you that through Ameritrade to get a free NinjaTrader. So you basically be using the data from Ameritrade onto your NinjaTrader, but you can apply it. It's very simple. We have a great tech support team that will help you set it up. So you can put it together. And we have a number of traders who have Thinkorswim that use it this way, okay? David asked, does it run on e-signal? David, it's a good question because we had some people asking about that. I remember last time I spoke with the people at Pro Trader Strategies, and I think they were working on that or they found a way to apply it. So I would call them up, okay? I'm probably not the best one to answer on this, but I think there is a way to use it with e-signal, or it's going to be in the very near future. So call the people or email them, and they should be able to answer that question better than I can. Let's see, James asks, how do we know to get out on the 5-minute chart? Once again, James, that's all in the course. We teach you all of our exits, all of our stop placement, and all of our entry. But that does come with the course. So, people have spent thousands of dollars for that information. It wouldn't be fair for me just to give that up free in a free webinar, okay? Let's see, Mahmoud says, I got PET-D, but when we do place order, if green bar and it's above the 50 moving average, and after 3 red bars, some green bars show up. So when is this case place a long order? Is it after the second green bar or when the first green bar closes? Mahmoud, that's probably a better question to email me personally. If you did purchase the PET-D, you have my email address and you should be able to ask me that and I'll answer it for you, okay? Because that's a little bit complicated, and most of the people who don't have the PET-D, we'd be taking a lot of the time talking about it and they're not really familiar with what we're talking about. So just email me and I can answer that for you, okay? And email me an example of what you're talking about. If you can show me a chart example so it'll better clarify what you are looking to do, and I can work with you. And once again, this is a perfect example of how we work with you. Mahmoud is a student of ours, so this isn't something where you get correspondence for the first week and then that's it, we drop you. You're going to be a student of ours for life. So anytime you have a question, anytime something doesn't make sense, just email me. You have my personal email address. You can contact me whenever you'd like, and I'll get back to you as soon as possible and have you up and running so that you know exactly different options in which you can trade, okay? We are an educational site. We're not just some strategy or system generating site where we give you the signals or force feed you how to trade and tell you what to do. We really want to educate you, so that's why it's more of a mentorship with our students. Joe says, is there a link? Yes, there should be one posted, but I would email. I think the best thing would probably be to do would be to email the the people at ProTraderStrategies.com right here, and they can set you up with a link to get that discount, or they can set it up for you with a payment plan if you like, Joe. Charles Ringer. Hello, Charles. He says, any benefit to using the 50-period VWAP instead of the 50-period simple moving average? Basically, just for people asking, first of all, let me just clarify. I'm sorry, there is a link that is posted in our chat box right now. If you want to just click on that, it will take you directly to the discounted 2-for-1 attendee offer. Okay, so James, you were asking about that, I believe, or I believe Joe was asking about that. Charles is saying, is there any benefit to using, basically, without getting too technical, a different type of indicator as opposed to the 50-period simple moving average, a different type of moving average? Please remember that the main reason we stress the 50-period moving average is not to get too complicated. Remember, as I stated in the opening of this presentation, we don't want to overcomplicate our trading. So the only real function of the 50-period moving average is to tell us what side to be on. In other words, we want to know whether we should be buying or selling. If you look back at the majority of your trades, I can almost guarantee that the majority of your losers were because you were buying when you were above the 50 and selling when you were below, or I should say buying when you were below the 50 and selling when you were above. You were out of sync with this simple rule. So that's really what we use it for. Now, if you have something that's similar to that and that works just as well, that's great. But over 37 years, this has worked the best for me in any market and in any time frame. So it's that simple. Why not continue to use it? Okay. So remember, the 50-period moving average, there's nothing magical about it. It's just a great tool for getting you on the right side. But it does not give you the permission to buy or sell. It is just telling you what you should start looking for. So if price is below, you should start looking for some type of structure to go short. If price is above, we should start looking for some type of structure to go long. But it does not give us the permission to buy or sell at the market. Okay. Let's see. Let me see if Bernie is asking, the plugin of these strategies, can the plug into Chart Navigator? Bernie, you know, gosh, I'm not sure if it is able to be used with Chart Navigator, but once again, I'm not the person to ask. Since ProTrader Strategies handles all of that, I would contact them. I would probably email them and ask them if it could. Okay. David asks if this is being recorded. Yes, it is, David. It is being recorded. We will send you a link. Just send us an email once again, and we will send you a link to all of our presentations. They are recorded, okay? Yes, don't worry, Richard. It is being recorded as well. Charles says it helps to hear our professional expertise about simplicity. Yes, it does. And trust me, you know, once again, for some reason we have been taught that the more complicated you make something, the more valid it will be. And this oftentimes works in other things. It works in machinery, possibly it works in some type of businesses, but in trading, it's the exact opposite. All right, so we can't use the format or guidelines that work for other things in the world. We have to turn them upside down for the market for some reason. That's why it's so difficult, and that's why I believe that most traders lose, because we're trying to use things that work in the outside world, but they don't compute with trading, because the market is an entirely different animal. It's an entirely different entity unto itself, so we have to work by its rules, by its guidelines. And its most precious guideline is that it says keep things simple. You cannot overcomplicate your trading if you want to be successful. So you have to learn how to do that. And this was a very important lesson for me to learn, and one that was very difficult, because I had always been taught that, boy, the more indicators, the more news I'm listening to, the more I'm in tune with the worldly factors, I will be a much better trader. But for some reason, I couldn't make a dime, so I couldn't understand. And my mentor said, listen, you're overcomplicating your trading. Anyone can do that, but the way you get to that road of consistency is by simplifying it. So simply, get rid or discard all the things that you think work that haven't shown any success, and let go of them. And just use the things that do work, like the 50-period moving average, like looking for a bar that closes in its top or bottom 25%, and things like that, okay? These things will help you. Now, if you want a recording to this, all you have to do is simply email to the address or call directly, and they will send you a link to the recording for today. Now, in closing, once again, this is a great 2-for-1 attendee special. If you purchase these separately, it would cost you over $3,000, roughly $3,200, and many students have paid that money for it. So I'm not sure they're going to be too happy when we see we've dropped it down for getting both of these down to $19.95. Please remember, you do not have to come up with that full lump sum payment if you can't afford it at this point. We do have structured payment plans. So contact the good people at Pro Trader Strategies, as you see there in the email address or the phone number, and they can put together something for you so that you can be up and running as early as today with these great things I just shared with you. Now, in closing, I just like to say this at the end of the year. I know all of us, mostly as traders, we like to set goals for ourselves for the coming year. Every one of us says, well, we're going to make so much money a week starting in the new year, or we're going to keep our risk to a certain level, or we plan to be this successful by the end of the year. And I would say the majority of traders never reach those goals. So it's extremely discouraging and very disappointing to know that you finished a year and you're no closer to your goal than you were a year ago or even years ago. If you're interested on getting on the right track, I'm not promising you that you're going to be running your own trading business in the next few weeks, but what we're trying to instill in you is consistency, because consistency is the only thing that will sustain you 10, 20, 30 years. If you're interested in getting consistency in your trading, like we've helped so many other traders in over 70 countries, please take advantage of this 2-for-1 attendee special and become a member of Specialist Trading. I want to thank you so much for attending today. Thank you so much for listening to this. Remember, this is being recorded, so you can request a link to that recording. I look forward to all of you becoming members of Specialist Trading, and I look forward to all of you becoming students of mine. Thank you so much. I'll see you next time. Bye-bye.